Good morning, members. Due to some personal reasons, I was on break from last almost 1.5 to 2 months. But now I'm back on track and I'm there to help you out with this recent changes as well as trends of this exam, that is Registered Valuer exam conducted by IBBI. So today I'm here with the new questions, new MCQs, and in this series we will cover almost 400 recent exam MCQs as well as 7 to 10 new case studies. So there will be a video every alternate day most probably covering almost 25 to 50 MCQs, and then after that the case studies which are there in the last 2 to 3 months in the exams. So be with me and continue study with CA Abhishek S. Chauhan. So now this is the first question on your screen, which reads as unsystematic risk is the risk arising from changes in interest rates, the market-wide risk affecting all securities, the company-specific risk that can be diversified away, and risk caused by inflation alone. The correct answer for this is company-specific risk that can be diversified away. This type of measures like systematic risk measure is beta, but unsystematic risk is the risk which can be diversified by the company and it is in the control of the organization. Next. In arbitrage pricing theory, the coefficient of a factor is called, it is called beta. Just we discussed arbitrage pricing theory is also called the modern CAPM or multi-factor model, in which multiple risk factors are covered and used for evaluation of expectation of investor. So this is called beta. Risk factor is called beta. A valuer shall communicate with the client clearly about the work or task or assignment or output only. The correct answer in this would be assignment. Next, under the IND AS 109, amortized cost of a financial asset is generally measured at. Now, this is a very common question which are asked to many members. The correct answer for this is C, initial amount plus interest payments minus repayments adjusted for impairment or amortization. So please remember this. Obviously, we cannot cover the entire IND AS 109, that is very lengthy, but at least we can remember this question which is asked in the exam. Under IND AS 36, or Ind AS 38, the useful life of an intangible asset under the accounting standard number 26 or 28, that is discusses the intangible assets, there only finite life was discussed. But under Ind AS 38, the infinite life is also allowed as per Ind AS, and it can be finite as well as infinite depending upon the nature of the asset. Then, if now this is interesting one, generally you will not get this type of questions in exam, but sometimes if you get, you have to create some sort of examples. If growth rate is 5%, dividend payout ratio is 50%, and cost of equity is 15%, which is basically KE, then P under Gordon model is likely to be greater than 6 times, 5 times, less than 4 times, cannot be determined. Now, sometimes the members answer this question as cannot be determined, which is not the correct way of answering this. You have to understand, if this type of question is there, always try to take some data which is a kind of exemplary data, and then try to solve the question based on that, right? So let's suppose if in this question you are not able to remember the formula, there is a formula also for this, that is DP ratio divided by K minus G also gives you the P ratio. But let's suppose you are not aware, then try to take a dividend. Let's suppose 10 rupees is the dividend, right? Then accordingly, if 10 rupees is the dividend payout ratio is obviously 20 rupees, because DP ratio is 50%. So 50% is retention. So if 20 rupees is the EPS, then only 50% DP ratio, dividend will be 10 rupees. And accordingly, calculate the price of the share. How to calculate that, sir? D1 upon K minus G. If you have the price of the share, you have the EPS, you can calculate the PE ratio. For a reference, you can pause the video and try to find the answer like this. P ratio is MPS upon EPS. MPS, market price per share, or theoretical market price per share, will be D1 upon K minus G. K is given, G is given, D1 is not given. So you can assume D1. If D1 is 10 rupees, then EPS1 will be 20 rupees, because DP ratio is 50%, right? And accordingly, the price of share will be 10 divided by K minus G, that will be 100 rupees. So P ratio here will be 5 times. The shortcut formula is also there, that is this, DP ratio upon K minus G. It is not important to remember each and every formula. Basically, by using the basic sense, you can solve these type of questions, and these type of questions are also very common during this May and June 2026, right? So be aware about these type of calculations by using the formula approaches. Next, E is 5 times the correct answer. Purchase of securities under open market operations, where RBI basically purchases the bonds on the market and supply of the money is increased in the market, that is called open market operations, is least likely to result in what would have the least impact? That is, large cap share price it is impacted, excess reserves of the bank obviously will increase, cash balances with the investors or the sellers who will sell their securities, obviously their cash amount will also increase. Then corporate earnings immediately. The interest rates and corporate earnings immediately they are not going to be affected. They are least likely to affected. That the companies who are working, their earnings will increase suddenly or overnight. It is not going to happen. Then short-term liquidity is best measured by, again, this, if you see this question in uh, AI softwares or otherwise in the books, the two answers will be there. One is the short-term liquidity best measure is, you will see the acid test ratio, that is the D option. The more prudent will be the cash ratio, right? Acid test ratio is also called quick ratio. It does not consider the inventories or the prepaid expenses, etc. But even cash ratio, if option is there in the question, that is more appropriate. If cash ratio is not there, let's suppose working capital ratio, current ratio, acid test ratio is there, and some fourth ratio is something else, right? Then in that case, the acid test ratio is the correct answer. But if cash ratio is available, then cash ratio is more appropriate answer in this case. If a person was the auditor of a company in financial year 2021-2022, whether he can act as a valuer on 31st of March 2024, that is after 2 years or within 2 years, whether he can act as a valuer. Now there is a question. It is saying section 144 is violated, model code of conduct is violated, section 247 of the Companies Act is violated, and yes, subject to the independence and integrity requirement is being satisfied. If you again check this question on these softwares, generally the answer is yes, he can act as valuer, but generally that is not the correct answer as per my view. Because when you read the section 144, it reads as that while being a auditor, you cannot act as valuer. That is correct, right? After that, before that, it is not, nothing is mentioned in 144. Model code of conduct basically says that the independence and objectivity should not be hampered, and if you are connected with that, if you have interest in that organization which you are going to value, right, over the last 5 years, that interest must be disclosed, right? But obviously you can be a valuer, but interest must be disclosed if you are the part of that, or interest, you having interest in that organization in the last 5 years also, right? But section 247 says clearly that earlier it was that you should not have any prior or after commitments with that organization, but it was not clear. But then in 2018 or 2019, I guess it was also clear that before 3 years and after 3 years, that time period, you should not be a connected or an interested party to that. And when you read the FAQs, it is considered that a statutory auditor or an auditor of the company is an interested party to that organization, right? So if you are the auditor of the company in 2021 and 2022, you cannot act as a valuer in 2024. It is as per my view, as per section 247. For clear understanding, you can read that section on your own also. Stamp duty is not required generally on loan sanction letter. It is not required on loan sanction letter. Income by way of fees for technical services payable by the central government is generally deemed to accrue or arise in India when paid to. Now, this is a deeming provision 913, I guess. Again, a doubtful question in my view, but it says that generally deemed to accrue or arise in India when paid to non-residents subject to statutory exceptions. That should be the correct answer, because if that work is done outside India, service provided outside, then not required deeming fiction. But if the work is done here, then the deeming fiction 913 is applicable. A Nobel laureate is expected to stay with the company for 10 years. Now you have signed a bond with a person that he will stay with you for 10 years. Can the company recognize this as an intelligible asset? The answer is still no, because for recognizing as an asset, it must be a resource. There must be some future economic benefits from that resource, and that must be in your control. Here, control is debatable. During the classes also, we discussed this concept in very much detail, that with respect to the employees, the control is always questionable, right? Even if it is given that he will stay with us for 10 years, but still the control, like machines, you will switch on and switch off the buttons. It is not going to happen with that particular employee. So it is not that it can be considered, or you can recognize that as an intangible asset. Next, which of the following characteristics of an intangible asset? It must be identifiable, non-monetary, without physical substance, under the control of the entity, future economic benefits expected. All of these are the characteristics of an intangible assets. If the lease period, now this is a question on Transfer Property Act. If the lease period is not specifically mentioned under the applicable route, may be generally taken as agriculture and manufacturing purpose. Then if lease period is not mentioned, then by default this lease period is considered as 1 year. But if it is not for agriculture or manufacturing purpose, other than that, then it is considered as month-on-month lease, right? So this is as per the Transfer Property Act 1882. It is 1 year. A shift from level 1 to 2 in the fair value hierarchy requires, under 113, when an asset or liability is transferred from level 1 to level 2 of the fair value hierarchy, the entity is required to disclose properly, complete disclosure of the transfer and reasons for it. It must be disclosed properly, right? If the ratio of the total liabilities, now this is again a question which is, you cannot remember all the ratios, but you can solve with a basic understanding of the ratio analysis or the balance sheets, right? The ratio total liabilities to total equity increases, right? Which of the following ratio will increase in the same direction, right? So in that situation, liabilities to total assets also, if the liabilities will increase, assets are constant, then the liabilities to total assets ratio will also increase, right? If the liabilities to total equity will increase, liability to total assets will also increase. An independent chartered accountant's report is generally not required in valuation for issue of shares of the company. Transfer of shares in certain non-regulatory private situations where regulatory valuation requirements does not, where no specific regulatory valuation, there is a term, no specific valuation requirements are not there, right? So this is the correct answer. No specific valuation requirements are there. In a plain vanilla swap, the issuer's fixed rate payment lag has an option value of, now this is an interesting question. In a plain vanilla swap, as we discussed in currency swaps also, if my interest rates are fluctuating and I'm feeling risky, then I can swap with you the rates as fixed rates, right? So in that situation, earlier I had taken a loan on fluctuating rate, but now I'm supposed to pay you only fixed. So our rates are only changed. There is no option with us. This is a mandatory, like futures contract, a mandatory situation. Now I have to pay you fixed rate, you will pay me floating. That is the arrangement between us, right? So there is no option in it. If there is no option, the value of option is always zero. Sir, where options can be? There are swaptions. In the swap will also be there, and an option to enter or not to enter a swap, right? So that type of arrangements, in that type of arrangements, the swaptions or that type of arrangements, the swap value or option value is there. But in a plain vanilla swap, वी आर सिंपली इंटरचेंजिंग आर सिचुएशंस कि मैं आपको फिक्स दूंगा, आप मुझे फ्लोटिंग दे दीजिए बस, और दोनों एग्रीमेंट में है. In that situation, there is no term called option value. So in this case, the option value will be zero. Cash flow from investing activities includes cash flow resulting from, now this is straightforward, purchase or sale of capital asset or long-term assets. This is investing activity. In GL Sultania case, the court preferred normal or fair price. Where shareholders of subsidiary company buy shares of holding company, it is called. Now, this is a question which I don't feel that is a correct answers or options were given to me, but the member who have shared this question with me was very confident that these were the options available. So, out of these options, if the shares of a holding company is purchased by a subsidiary company, the almost appropriate answer would be management buyout. That is MBU. The leveraged buyout, in that the shares of the company is acquired by using a debt. The green mail is basically when company is in a verge of hostile takeover, right? In a verge of hostile takeover, that like when let's suppose a company do not want to sell its this company, but the other company from market they start purchasing the shares, right? So to gain the control over the company, to avoid this kind of situation, if you purchase the shares from that hostile takeover candidate, this is called the green mail. The beer hug is also almost that kind of situation. So out of these four situations, the managed buyout seems more appropriate, but not the 100% correct answer. Let me tell you very clearly. Management buyout is basically when the company is not in good shape and management of the company tries to buy the shares from the outside shareholders to sustain or to gain the more control over the organization, right? So this is called management. But in this situation, other three are not appropriate at all. So C is more suitable in this. In liquidation, the liquidator's cost is always at the priority. We always read this, right? So it is paid by the corporate debtor of the company which is going to be liquidation, or through the liquidation estate, right? It is going to be paid. Tax proceeds include tax revenue collections of the government, obviously. Fiscal deficit does not include, it includes indirect tax, it includes direct taxes, it includes subsidy only, but public debt and borrowing used to bridge that deficit is not part of physical deficit. But yes, you have to bridge that gap through public financing. So these were the questions that we have covered in this first video. Next video, please complete these questions. And now there will be videos. So please go through these videos in detail because these are the most recent questions. Most of them are going to be repeated in the next 2 to 3 months in your exams. So 2026 is the time to pass this exam on priority before the new question bank is being added by the IBBI or the NIV is being formed. So if any question or any query or any answer you're not comfortable with, or you feel that I have made any mistake in answering any concept, then please mark in the comments of this video, or otherwise message me on the number that is flashing on your screen. This is available on WhatsApp also. You can WhatsApp me if I have made any mistake while answering any of the questions. I have taken duly care of that, but still there can be any mistake. If there is, then please update me on that also. We'll correct that in the coming videos, and be with me for the next case studies and the MCQ videos. Thank you so much. Have a great day.